This is Cece. Welcome to the Orbit. It is Friday, February 16th. We're about 45 minutes into the trading day. We've got stocks lower. We had a hotter than expected PPI number this morning. That follows on the heels of a hotter than expected CPI number earlier in the week. You remember what that did to stocks that day, but then we bounced out of that for the rest of the week into this PPI print, hotter than expected. Not a massive reaction in the big indices like SPX, but you are seeing a lot of big moves in individual stocks. You're seeing a bigger move in IWM and things like that. We are looking at the SPX. We are just above that 5,000 level. That is important because we are on an expiration Friday. From a gamma standpoint, where the most open interest is in SPX, it is at the 5,000 level. There is some gamma to the upside that starts around the 5,040 to 50 area. So there is some resistance up there if we were to go green on the day, but to the downside, we are pretty close to the heaviest gamma. There is not a ton of open interest below the 5,000 level for today's expiry. So if the market was unable to hold the 5,000 level, there is some room for it to move lower. That does not look to be the case yet, but again, it is still quite early. We've got an expected move of about 0.4% from here. That is about 49.90 to the downside and 30 to 40 to the upside, where I had mentioned that upside gamma a little bit earlier. The chances on expiration Friday for a 5,000 pin or somewhere near there is strong. Earlier in the day, we got down exactly to that 5,000 level, and then you saw these buyers emerge. And what that is there's a lot of puts owned down there. We got down to 5,002, essentially. Buyers emerged, pushed us back up to where we are now at 5,012. And that is most likely the effect of that gamma. There's buyers at 5,000 or just below. At some point, those buyers could be exhausted, theoretically. But at the same time, those buyers now become sellers up above the 5,000 level. And that's how you get a pin. It's sort of buyers below, sellers above, right? That does not guarantee a pin, but it is some of the action that we are clearly seeing right now. As far as zero DTE trade setups, let's quickly just look at a credit put spread down below that level. Right now, on the expected move, we are looking at the short strike of the 49.90 level. Of course, you can take that and move it a little bit lower. Also, obviously, whenever the entry is, it depends on where the spot is. So if this was at 5,000, this would probably be more the short strike at the 49.80 level. And that's one way to look at that. That would be legging into an iron condor potentially. If you saw it get to 5,000, you put on a credit put spread, it bounced a little bit, you sell a credit call spread. Now, obviously, you have to be careful because if that 5,000 area does not close, it could accelerate to the downside. If we accelerate to the upside, those upper levels, you have to remember where that gamma is on expiration Friday, up near that 50-40 level, let's call it. The gamma will clear for the most part, and a lot of that will happen intraday as traders roll positions out. You would expect to see the same positions out at, maybe the 5,000 level, maybe the 5,050 level, maybe the 49.50 level into the next set of expiries. But since this is a monthly expiration, you would expect that most of that gamma would clear. And when we start next week on Tuesday, after a long weekend, a lot of that gamma will be gone. It might open up the market for some larger moves. You could look back on the CPI bounce after that steep sell-off of, we saw the market down about 2.5% over the course of 48 hours. But then it bounced and we rallied right back. Some of that could be attributed to the gamma expiring this week around that 5,000 level. It found buyers below, it popped up, it tried to get above, it found sellers, and now here we are back at 5,000. It does bring into question whether the CPI, the hotter than expected CPI and PPI this week, if they had happened next week in a different gamma backdrop, if the market reaction would have been slightly different. Of course, across the market, we're seeing a number of different stories. We're seeing a lot of volatility in some single name stocks. Of course, SMCI is the poster child right now. That is down big today and has reversed from, it got over 1,000 yesterday, and we see it all the way down to 900 today. The expected move into next week is about almost 20%, call it, so you can see the volatility in some of these names. Next week, we have NVDA, which is going to be very important earnings for maybe the next leg of the market with these chip stocks, with these AI stocks. That is clearly the story here. And we'll check back in before NVIDIA's earnings.